Hello, our company's name is Fitletics.
Our management team consists of myself, Chris Harris, in marketing,
Myself, Deborah, of operations.
Me, McKeon Kalmbach, production.
Marisol Olivas, in charge of human resources.
I am Isabelita Reyes, in charge of finance.
Fitletics is a customer-oriented athletics footwear company with a simple mission of providing quality footwear to its customers at an affordable price. Fitletics has a product line that reaches 4 market segments, which include North America, Europe, Africa, Asia Pacific, and Latin America. Each segment has their own number of models: 438 for North America, 430 for Europe, Africa, and 350 for both Asia Pacific and Latin America.
Because Fitletics serves a significant portion of the market and has an extensive product line, the target market is diverse. Competitive pricing and quality materials make Fitletics brand footwear attractive to a wide array of consumers. Fitletics' ideal consumers consist of highly athletic, young to middle-aged adults. Customer retention is essential for the company, so the importance of providing a quality product that is likely to create brand loyalty is highlighted. Fitletics has employed a strategy of differentiating themselves from the competition in the past 3 years. This has been done by continuously increasing the company's SQ rating, increasing advertising efforts, and increasing retailer support. This strategy has allowed the company to secure nearly 25% of the North America market share in the online and wholesale segments. Fitletics aims to utilize a similar strategy to better penetrate the Asia Pacific wholesale market.
Fitletics competitors within the industry, the top competitors, consist of AccuKits. AccuKits seems to be the closest in price and SQ rating against Fitletics. And as you will see later in the market share slides, that we do lead in both the internet and wholesale market in a few years, as well in North America and in Asia Pacific. Our other competitor is Polyrun. And Polyrun, I would consider is a higher competitor because they're priced, however, not comparable to Fitletics. They do have a higher price and a higher SQ rating, but we do compete for market share with them, being stronger in year 14 and 15 in the internet segment. Model availability, Polyrun seems to have more pairs than Fitletics does, but one thing that does stand out to us is Fitletics offers free shipping in all markets, whereas AccuKits and Polyrun do not. Our products, as you can tell by our products from year 14 through 16, here's how we stand up against our competitors. Polyrun having the highest price, AccuKits being lowest, we're kind of in the middle. Each year you can see in the internet segment that the SQ rating does increase for Fitletics as well as price and seems to stand up against our competitors. Again, I want to highlight that we do, one of the reasons that I think that we did well in market share is because we do offer free shipping in all markets. We go on to the wholesale segment. Again, Fitletics price is going to be in the middle as well as the SQ rating. We do gain each year. Polyrun is going to be your higher priced wholesale, and AccuKits is going to be a little lower price, but we do stand up pretty competitively on low price against AccuKits.
And then here is the market share for North America. We went ahead and compared it with AccuKits and Polyrun. You can see the internet segment and the wholesale segment. And we did this for each region. There's Europe, Africa. And we did it for Asia Pacific as well as Latin America.
Fitletics' primary sales and promotion strategy has been to invest heavily in brand and search engine advertising while keeping internet and wholesale product pricing competitive within the industry. Fitletics offers rebates that meet or exceed industry average in all markets. Advertising efforts show a clear differentiation between Fitletics and competitors. This sales and promotion strategy is designed to increase brand recognition and brand appeal to consumers. The following graphs compare Fitletics against AcroKicks and Polyrun in brand and search engine advertising in the North America market. The following graphs compare ourselves against AcroKicks and Polyrun in the Europe-Africa market. The following graph compares us against them in the Asia-Pacific, as well as in the Latin American market. The graphs below show our rebates by market and industry average. As you can see, in all markets in almost all years, 14 to 16, we meet or exceed the industry average in our rebates.
Corporate social responsibility for Fitletics is to create value for the brand through its actions. Throughout the last 3 years, we have been consistently working on improving employee working conditions, putting efforts in energy efficiency initiatives, and making equipment purchases through cash outlays. In year 16, more corporate social responsibility efforts can be seen in all areas.
The production strategy in North America for Fitletics has always been to increase facility space and production equipment to meet capacity. As you can see in year 14, we increased facility space and was able to max out the facility space in year 14. And again, in year 15, after production equipment had been salvaged, we were able to repurchase equipment with cash flows to max out our space. On the next slide, you'll be able to see in the North America productions how we stand up against our competitors in maxing out our production space. And then in Asia Pacific, again, Fitletics was trying to max out capacity, also increasing capacity. We increased our production equipment to max it out by year 15. We were able then to max it out again in year 16 after equipment was salvaged, old equipment was salvaged. We did replace some of it with new versus refurbished, but most of it with refurbished. On the next slide, you'll be able to see how we stand in the Asia Pacific productions against our top two competitors, AcroKicks and Polyrun.
A human resource strategy is essential to have a productive and motivated workforce. There is no prior year compensation and productivity data for Europe, Africa, and Latin America as of yet. Fitletics was below industry average for most compensation and productivity, but was above industry average for incentive pay in North America and overtime pay for both North America and Asia Pacific. Overall, Fitletics was a bit below average for worker compensation and worker productivity, which shows Fitletics needs improvement in the set approach for the human resource strategy.
In the next slide, we're going to see the financial strategy for Fitletics. Fitletics has made an effort to promote the growth of the business through the cash as opposed to debt and equity financing. The company does not currently issue any dividends, but is working to change this in the years 17 through 19. The company has continually repurchased its stocks in an effort to further increase the share price to its stockholders. Fitletics has continuously repurchased more shares of stock than any other company within the industry. In the next slide, we are going to see the financial strategy and the shares outstanding for Fitletics. In the graph, we see the outstanding shares for Fitletics compared to the industry average. In the next slide, we are going to see the debt to asset and the debt to equity ratios for Fitletics. And we can see in both graphs that there has been a steady decrease in both ratios from years 14 through years 16. In the next slide, we are going to see Fitletics' stock price compared to its competitors, AcroKicks and Polyrun. In the following slide, we will see Fitletics um, the earnings per shares and return on equity compared to its two competitors as well, AgroKix and Polyrun.
Some of the strengths and opportunities that Fitletics has been through and seen was the significant efforts to increase retailer support, which increases wholesale market share. The company had a really strong brand image, which provides the company with the opportunity to attract new customers and retain the customers that we already have. Fitletics leads the industry in advertising efforts, which presents the opportunity of customers being aware of the brand and its product line. We offer free shipping in all markets, which creates a more attractive brand image in the internet segment. Some of the weaknesses and threats Fitletics has seen was some of the lowest productivity rates in the industry, which presents the threat of not being able to meet consumer demands. The company has the lowest compensation package in the industry, which could lead to the loss of a lot of skilled workers. Fitletics has diverted attention from internet sales to focus on the wholesale segment, which results in the loss of significant internet market share. And Fitletics does not utilize celebrity endorsements, which can have a negative impact on the brand not having those celebrity appeals.
The company will continue to differentiate itself from competitors by increasing advertising efforts and retailer support. Fitletics will replace existing production equipment with a larger percentage of new equipment. The company will offer more competitive compensation packages and create more incentives for its workers. Fitletics will be offering dividend payments to make purchasing its stock more appealing. Pursuing these changes and strategies will allow the company to increase market share and address weaknesses and potential threats that the company faces. Increasing advertising efforts and retailer support will allow the company to increase market share in each segment. A larger percentage of new equipment will mitigate damage from equipment failure, and a more extensive compensation, benefits, and incentives package will help increase worker productivity.
In the following slide, we will see the funding requirements that Fitletics will use to pay out dividends to its shareholders. In the below graph, we do see the breakdown on how Fitletics will use the net revenue to be able to cover the dividends. In the following slide, we are also going to see how Fitletics is going to be funding the production equipment increase, and it will also be using the net revenues to be able to fund this production equipment, as you can see in the following graph. Also, Fitletics is going to be working on increasing the advertising efforts, and you will be able to see in the next graph the way that our company is going to be funding these efforts and these advertising costs. In the next slide, we will also be seeing how Fitletics will be covering the worker compensation increase, and as previous other costs, we will also be using our net revenues to be able to pay for the workers' compensation costs, as we can see in the graph.
Our future performance targets over the next 3 years, as previously discussed, is going to be to increase capacity both in the North America and Asia Pacific areas. By doing this, we will purchase newer equipment so we can see less downtime for repairs of refurbished equipment. We're going to continue to increase our compensation, which will increase our productivity amongst workers, and then increase marketing in all areas, which should increase brand recognition and possibly increase revenues. Based off our projections, we believe that our earnings per share will continue to go up from year 17 through 19, as well as stock price. On behalf of my colleagues and myself, I want to thank you for your time and watching the presentation for Fitletics. Thank you.